clearly we've seen disruption in entertainment industry, transportation industry, financial service industry.
Advertising, yes, keeps going.
How can investors efficiently invest in digital disruption? And what part of the cycle should investors be looking at? From fully blown and developed publicly traded companies, or companies that are looking for seed money and angel investors?
Okay, there may be opportunities in private markets that we identify at different stages of their life cycle. What I would like to say generally about this, and this may fit into opportunistic portfolios, overweights and underweights, you are often dealing with particularly volatile equities in this segment.
Right.
But it's important to know that industry transformers, usually go on to fantastic long-term performance. That their incumbents that they defeat don't just disappear from the passive index. They can stay and suffer and shrink with the second best solution for a decade or more. And the companies that are transforming their industry that happen to have the best product often have outrageously high seeming valuations, but they grow into it over time. And when they achieve that way, they have very big drawdowns because everyone owns them, but they end up recovering and outperforming fundamentally. So those are the companies that we feel that we can invest in for the long run, even as we may manage the risks around their tactical performance.
So you're looking at companies that are publicly traded.
Correct.
And even maybe already on index. They're so large that they may be on an index, so that taking out much of the risk of that 1 in 100 private company entrepreneur that actually makes it public.
Look, I think there are opportunities for investors in private markets for certain, for private equity, for real estate, in different classes within. That needs to be highly disciplined, segmented investment that is not timed at all. If you can't stay with that for the long run, you probably can't get the positive returns that you get from these types of investments. And some of that will clearly be in technology and biotechnology. Some of this you'll find in Asia. What we just mentioned about disruption, we now have many comparable companies in Asia that will, in essence, take away some of the opportunities from some of the Western companies. And in the end, it's perhaps a hypothesis at this point, though. What we're seeing is probably different parts, different hemispheres, again, evolve somewhat separately. My notion on all of this is that will be a somewhat less volatile portfolio, as we've seen that global investment portfolios are less volatile than regional portfolios. You mentioned Brexit. We could talk about, any particular crisis zone. China didn't have great returns last year.
Right.
But you did better when you diversified across the world.